The breaking economic data comes out in the United States, 249. That's your print for initial jobless claims, slightly higher than the estimate 235 and higher than the previous number of 239. We await the Philly Fed business outlook. The estimate there 24.6, the previous number 27.9. But the import price index disappoints. It comes in at 0.2% month on month. We were looking for 0.4. The previous number revised higher to 0.8%. So they're the headline numbers. What are you seeing, Alix?
Yeah, I'm also taking a look at, say, capital goods prices. They did rise 0.2%. They didn't change in September. You also had auto prices falling. That was interesting because we saw used car prices actually rising in the CPI data that we got yesterday, and consumer good prices falling 0.1%. And it's my question, right? Why aren't we seeing inflation in core goods?
And likewise in the labour market, with initial jobless claims as low as they have been for so many years now. A slight tick higher here, but historically 249 is still incredibly low. Torsten Slok, Deutsche Bank chief international economist, is still around the table with us. Let's talk about that. Import prices. Alix pointed it out. Why are we not seeing a pickup here at all?
It is a bit of a mystery. I mean, the dollar started depreciating in the second quarter of this year, and normally when the dollar goes down, inflation should go up. And we did see also import prices go up from a lower level, but it's still not quite feeding into goods prices. And we did see a little bit of goods price inflation yesterday, but it is a big mystery when you split CPI into goods and services. Services still hanging in nicely between 2 and 3%, but goods inflation is really not doing much. So the big question is, are we having to wait a little bit longer before the goods price inflation comes around? But the bottom line is, up to this point, the wolf still hasn't arrived in inflation.